All right, welcome again. We're going to jump right into this. I have a fascinating video, highlight special guest Elon Musk did a interview on the All In podcast which included guys like David Sachs, Chamath, Jason, and I thought it'd be valuable as listeners to catch. It's a full hour, and I shortened it up to like the top 10 minutes that I liked, some of the highlight pieces, and then we're going to dissect some of the things that I thought were really relevant talking about this. So let me go ahead and...
Well, I think it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like I would really advise people to not have margin debt in a volatile stock market, and from a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was the CFO of SpaceX.
Okay, so just to pause for just a second, so you guys are understanding what he's talking about. He's giving a recommendation to stay on margin debt. We're talking about like borrowing to invest. We saw the last spike before the last crash. People were getting so hot and credit was getting so easy that people were literally like running their credit cards to buy stocks, running debt to buy investments. And that's what he's talking about with investment, like being careful with like marginal debt.
Was at Broadcom in 2000, and he said that, and that's a good company making good products. And he said that from peak to trough, I think in less than 12 months, Broadcom went down 97%. So like even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think to much higher levels. But if there's like mass panic in the stock market, then you got to really be careful about margin debt. But I mean, this is just as we know, the economy is cyclic. So and we're somewhat overdue for a recession. And my best guess is that, we have sort of stormy times for a year to a year and a half, and then things start to dawn breaks roughly in Q2 24. If I were to get, that's like my best guess. Recessions don't like booms don't last forever, but neither do recessions.
And it's a 14-year boom, so a 6-quarter recession seems like that might actually balance out. The last time it was 4 or 5 quarters, so. It's not easy.
Interest rates have been rising. That increased the cost of the consumer of getting loans, things like that. We've had a stock market correction, really a crash in a lot of growth stocks, software stocks. From where you sit and the data that you see, where do you think the economy is headed right now? Do you think we're in a recession, or is it just a risk? How do you assess our current economic situation?
Well, predicting macroeconomics is always difficult, and one should assign probabilities to these things. Ironically, I did last year. People asked me what I think about the economy. I said, well, I think we might enter a recession in approximately the spring of 2022. Yeah. Now the thing is that recessions are not necessarily a bad thing. I've now been through a few of them, and what tends to happen is if you have a boom that goes on for too long, you get misallocation of capital. It starts raining money on fools, basically. It's like any dumb thing gets money, and I'm sure you've seen a few of those. So at some point it gets just out of control, and you just have a misallocation of human capital, where people are doing things that are silly and not useful to their fellow human beings. And then those companies, there needs to be sort of an economic enema, if you will, to have everyone sort of shift uncomfortably in their seats. So, but eventually the economic enema does its job. It clears out the pipes, if you will.
Yes.
And sort of the bullshit companies go bankrupt, and the ones that are doing useful products are prosperous. And but there's certainly a lesson here that if one is making useful product and has a company that makes sense, make sure you're not running things too close to the edge from a capital standpoint. That you've got some capital reserves to last through irrational times. Because in the past, when there's been a recession, it has gone. It's amazing. It's flipped like a light switch. I mean, David, do you remember this from the PayPal ex-PayPal days when we raised $100 million in March of 2000, and we had the demand was so high, we had people like VCs like just literally without even a term sheet, wiring money into our account.
We'll send the term sheet later.
They literally were like sleuth out our bank account number and wire money in. And we're like, where'd this come from? And it's like, oh, so it was like, there was literally fire hosing money in March of 2000. And then in April 2000, the market went into free fall, and it went from raising money was trivial to even good companies could not raise money in a month. So it's just important to bear in mind, like that, PayPal almost went bankrupt in 2000. We came close, but thankfully we'd raised that $100 million in March 2000, without which we'd been game over basically. And we kind of saw it coming. So it's like we got the X Confinity merger done in like 3 weeks and raised $100 million, because we were all like, we see this coming to an end pretty soon. And then a month later, it was like, a nightmare basically. Anyway, so it's just important to make sure if you're a healthy company, you got some capital to get through things, and then what's your costs, and if it is a recession, which more likely than not, it is a recession. I'm saying it is, but it probably is. Then just what's your cash flow and get to positive cash flow as soon as you can. So but I think we probably are in a recession, and that recession will get worse. But these things pass, and then there will be boom times again.
Okay, so we're hearing from Elon, and he's saying things are not going to get better, right? Things are going to be getting worse. We've got harder times ahead of us. We're likely already in a recession. And mind you, that some of these comments came from a while ago, and some of the data that's come in recently is more profound and is having more impact and leaning, I would say, towards that sentiment more than it was before. So let's finish this, and then I've got some really great feedback on like what you guys can do about it right now.
So it'll probably be some tough going for, I don't know, a year, maybe 12 to 18 months is usually the amount of time that takes for a correction to happen. I mean, the obvious reason for inflation is that the government printed more money than it had, obviously. So it's like the government can't just have issue checks far in excess of revenue without their inflation. Velocity of money held constant. So unless there's something would change with velocity of money, but it's just if the federal government writes checks, they never bounce. So that is effectively creation of more dollars. And if there are more dollars created, then the increase in the goods and services output of the economy, then you have inflation. Again, velocity of money held constant. But so this is very basic. This is not like super complicated. And if the government could just issue massive amounts of money and deficits didn't matter, then why don't we just make the deficit 100 times bigger? Okay, and the answer is you can't, because it will basically turn the dollar into something that is worthless. So and various countries have tried this experiment multiple times. It's not like, oh, I wonder what happens if this is done. Have you seen Venezuela? Like the poor people of Venezuela have been just run roughshod by their government. And so obviously you can't simply create money. The true economy is very important. Like the true economy is the output of goods and services. It's not money. It's literally what is the output of goods and services. Money is simply a way to for us, or anything that you call money, is a way for us to conveniently exchange goods and services without having to engage in barter, and also to shift obligations in time. Those are the two reasons that you have money. This thing called money. It's really a database. Money is an information system for labor allocation and for exchange of goods and services and for translating in time. And the quality of that information is a function of, it's like you can apply information theory to money, and I think it helps explain why one money system is, or why one action is better than another. And so you just like an internet connection, you'd want something that's high bandwidth, low latency and jitter, and is not dropping packets, does not have a lot of errors in the system. And the same is true of money. You want, and really, like you said, what did PayPal really do? That it helped improve the bandwidth, the speed at which money could move. Instead of mailing checks back and forth, which amazingly that was what people did in 2000, you could now do real-time exchange of money, and now you could ship your goods immediately instead of mailing a check and waiting for the bank to clear the check. So the ultimate thing that with PayPal, or if it sort of was in the X.com sort of went more less sort of niche payments and more sort of broad financial, would be to simply just intermediate all the heterogeneous COBOL databases out there running on mainframes doing batch processing, and have a single real-time system that was secure and not batch processing. And so it would just be, from an information standpoint, more efficient, and eventually it would, all the batch processing COBOL mainframes operated by the banks would cease to exist. Sure, we don't even need.
Okay, so to just kind of summarize this and not get too much, Elon kind of goes down these, spectrum tunnels, and I can relate to that on some level, but not the same level. But what he's talking about is like real GDP. The real economy is based on output in goods and services. And that is not keeping up with the amount that we inflated the economy with cash that frankly didn't keep up. And that's why we had inflation. And then he gave some examples because, he helped start PayPal. That's how he got to start, how they almost went bankrupt, what actually led to PayPal doing well, and how they survived the dot-com crash and then raised $100 million. He went through all of that, and it's really, at the end of the day, solving a problem to create and increase revenue and efficiencies is really the ultimate goal of our economy. That's how the economy is measured. That's how the dollar gains and loses value against other countries. And at the end of the day, that's how we measure success in our dollar denomination. That's how we measure the value of our economy. And right now we're seeing a contraction, no question. And I'm going to talk a little bit about this in a second, but we're also seeing this funneling of cash into the market still. The market is still so high, and there's actually a reasonable explanation for that, that likely is going to shift here in the next quarter, maybe end of quarter this year. So let's just finish this up. There's some great feedback in the last minute and a half of this, and then I'm going to jump into some charts and some references around like what's actually going on, what you can do about it.
Sure. There will be certainly, an economic competition that I think will blow people away when they realize just how competitive they have to be competitive with companies in China. It's very difficult. Tesla is competitive. But Tesla is competitive because we have an awesome team in China that, so Tesla is sort of pretty far out there in terms of work ethic anywhere in the world. So the Tesla work ethic in the US, I think, is substantially greater than any other car company or any large manufacturing company that I'm aware of. Look, I think, the point of a company is to produce useful products and services for your fellow human beings. It is not, some political gathering place or a thing where that's the point of the company. I'd say politics and other stuff let's not lose sight of why companies should exist.
I have been guiding our portfolio company CEOs to be at cash flow break even now or extend runway to Q1 2025. And they're
25.
Yes, because I think Elon and I are kind of roughly in the same place we have been for a while, which is like, mid 24 is when the recession ends, and you need to give yourself 2 to 3 quarters of buffer so that you can go and raise around, which takes 1/4 to 2 quarters. And once you start to get escape velocity out of a recession, having money through end of Q1 2025, I think is a minimum requirement. And
okay, I'm going to pause this because for a lot of us, it's like, whoa, what is Chamath talking about here? And Chamath's a self-made billionaire, used to work with Elon, has some ties in the tech world with Elon in the past. But what he's talking about, like this projection clear past 2024, like companies are not out of this tailwind until the 2025, is the ability to raise funds into or out of an existing recession. So he completely agrees. We're going into a recession. We're not going to see the light at the end of this tunnel until maybe first quarter, second quarter, definitely. He's actually said more recently, I'll show you this. He's actually said more recently, he thinks it's going to be even more prolonged. It might even be further. But the reality is how does this impact you? Well, if you work for a company that is a startup, if you work for a company that was given money from the public and you are not making money right now, you are not at least at break even or have the runway in cash to get to 2025, you probably should start considering working for a company that does. Now, that doesn't mean you won't be able to transition or you won't be able to make those changes, but the prediction is that those companies are not going to last. Why? Because they are not going to be able to raise cash in the next year to 2 years. It just won't be feasible for the company that is a startup to survive this unless they have so much runway to have, and runway being cash in a bank to pay employee expenses, get the product built so that they're actually creating cash for the business. So that would be my first warning. The second is if you're invested in a company like this, this might be a huge red flag for you to start considering how you're holding your capital in these type of companies. So I'd be looking at like stocks, pink slips, right? If you're trading these like, really high risk entities, or you own some, stocks or maybe some private investments in like startups, if they don't have cash that's going to hold them till 2025, it's kind of a done deal for them. They're just burning the midnight oil, so to speak. And so that's what they're talking about here.
Of the companies that I think were the most precariously positioned, there was 5 of them that got their acts together and really did it. But these are all CEOs of companies that, if you said them, you would know some of them.
Yeah, I said Stan Druckenmiller. He, as you recall, last year, he predicted that inflation would be lasting. This was in spring of 2021 when transitory was the word of the day. This year, he predicted the bear market rally we had in July and August. And I remember back at the Coaching Summit in May, there were around that time, he was interviewed and he basically was saying that as soon as there was a bear market rally over the summer, that he would then put a short position on. I don't know if he actually did that, but he said he's going to do that. And then it turns out that the summer rally that we had was a dead cat bounce. So he was right about that. And now he is predicting a hard landing in 2023 with a deeper recession than many expect. So sadly, I suspect he may be right yet again.